So mortgage interest rates dropped to the lowest levels in history last year. Obviously, we had the pandemic and the government was trying to react by dropping the Fed funds rate to pretty much virtually zero. Now, mortgage interest rates didn't go to zero per se, but they obviously followed, and the rates were just extremely, extremely low, which caused a rush of people trying to refinance their homes. Now, you might have sort of missed the boat if you didn't do anything back then, and maybe you're trying to get back in the game right now, but maybe you're seeing that interest rates have actually been increasing for the last 7 or 8 weeks in a row since the end of January. But good news, guys, because interest rates just dropped this week, April 17th, which is when I'm actually shooting this video. And if you're still kind of like on the sidelines, just on the fence about refinancing, and you still probably don't know on why you should be thinking about refinancing, I'm going to give you 3 reasons in this video right now as to why you should be thinking about doing a mortgage refinance right now in 2021. All right, so the first reason why you're going to be thinking about refinancing is for what they call the rate term refinance. And the rate term refinance is just really just fancy words for getting a lower interest rate that can either A, help you save on the monthly payments, or B, help you get a lower term so that you can pay off your loan faster. Let's go ahead and go through an example first about the first option, which is the getting a lower monthly payment. So let's make a few assumptions here so that you can actually understand a little bit better on these numbers. Let's just basically assume that you have a $300,000 loan at a 4.5% interest rate, which makes your principal and interest payment at $1,520. Now, what if you refinance that same loan at $300,000? And obviously, guys, I'm not assuming closing costs. The closing costs are pretty much part of any refinance. So this is just to make things very, very easy for you to understand. So let's go back. You have a loan for $300,000 and you might be able to refinance it at a 3.25% interest rate, which will actually make your principal and interest payment be at $1,305 every single month. Now, the difference between those two numbers would be $214. So basically, every single month, you're saving about $214.35. So just, disregarding the cents part right there. But if you just stretch those savings out over 60 months, and by the way, most people just stay in their homes or stay in their mortgages for about 5 to 7 years, then you would be saving about $12,000, a little bit, almost $13,000, comes up to about $12,825 over those 60 months. So as you guys can see, just getting the lower interest rate from that 4.5% to a 3.25%, that would be significant savings, not just monthly, because $214 every single month is a significant amount of money that you can be saving. Okay, now let's talk about the second example, which is gonna be getting a lower term. So let's assume the same thing, guys. You got a $300,000 mortgage, 4.5% interest rate, 30-year fixed. And now you were thinking about doing a 15 years. Well, with the first mortgage, you're gonna be paying over the whole 30 years. So assuming that you pay from day one all the way to whatever the day, at the end of the 30 year, you're gonna be paying a total sum of $547,220. So that's gonna be what you're gonna be paying over the 30 years, both principal and interest. But as a matter of fact, the interest alone on that is going to be $247,220. That's insane. You're basically paying, almost the same amount of money that you finance just on interest. And that's why a lot of people say that if you finance a mortgage over 30 years, you're going to be paying roughly about twice that amount. Now, let's assume that you do a refinance for 15 years. So not only you're knocking off 15 years on the mortgage, but also you're gonna be getting the lowest interest rate available in the market, because when you refinance for 15 years, you actually get to have the lowest interest rates available, especially if you have a lot of equity in the home and you have a really good credit score. So let's assume that you can get a 15-year interest rate at 2.5%. Now, I'm not quoting you any interest rates, but you should expect something like this right now in this market. That's going to push up your principal and interest payment to $2,000 a month. So in our first example, you're paying principal and interest at $1,520. So your monthly payment is gonna go up about $480. But over the 15-year term, you're going to be paying a grand total of $360,066. And on interest alone, you're going to be paying $60,066. So the grand total difference on those two numbers are going to be 187,154, and that's what you're going to be saving over, that's what you're going to be saving between the 30-year loan and the 15-year loan on both principal and interest. All right, awesome. So now the third reason as to why a lot of people refinance, and really I would say probably the third most popular reason, is because you can actually take your home's equity if you have enough of it. So it's what they call a cash out refinance. And basically, it's just, throw some numbers out there. Let's say that you have a $300,000 loan and your home is valued at $500,000. That means you have a loan to value of about 60%. Now, the government regulates how much cash you can access from a home unless you can get the VA loan, which is 100% financing. But nowadays, they don't even let you take all the home's equity, even if you have a VA mortgage. But on a regular conventional or FHA loan, you can get up to a loan amount up to 80% of the value of the property. So you can go up to a loan to value of 80%, which means that if you have a $300,000 mortgage right now and your home is valued at $500,000, then you can get a loan up to $400,000. That's 80% of $500,000, which is the value of the property. Now, that means you have $100,000 to do pretty much whatever you want with it. And, people, at least some of my clients, they take that money to invest in other things. They can invest in the stock market, or they invest in, maybe buying another home, a second home, vacation homes. That's really popular right now. So that's, that would be a way to finance other things, bigger projects. Maybe you want to do some home improvements into your own home. You could do that as well. You can debt consolidate if you have high credit card debt or personal loan debt. That's actually not a good thing. Obviously you're going to be paying more interest on those things. When you get a mortgage, the interest rates are going to be at the lowest levels possible. Obviously, it is the cheapest finance that most consumer can get. So debt consolidation makes a lot of sense. But maybe you also want to pay off student loans or whatever have you. So you have basically just a huge array of things that you can do when you have, equity in your home. Now, obviously, in a lot of cases, guys, kind of what happens when you take out, when you take out equity from your home, you're going to be financing a much bigger loan amount. And, if you compare that to the loan amount that you have at the moment, over time, and obviously the longer the time frame gets, the more interest you're going to be paying because you're just going to be financing, such a much bigger loan. But there you guys have it. That's basically 3 reasons why you may want to be thinking about refinancing your home right now in 2021. Those are really the 3 most popular things that you can do. I'll give you a couple of bonuses. For instance, if you have an FHA loan, maybe you took out an FHA loan last year or 2 years ago, and maybe your home's value has been going up a lot, and your credit scores are really good, you may want to be thinking about doing a refinance into a conventional loan so that you can avoid the PMI. Because if you don't know, guys, mortgage insurance premium on FHA loans is pretty much permanent throughout the whole loan unless you refinance into the conventional loan. With home values going up so much over the last, well, let's call it the last 4 months, or maybe even just going back into 2020, a lot of people that bought a house back in 2019, 2018, 17, whatever have you, they just have a lot of equity. So if you have PMI, an FHA loan has mortgage insurance, or if you have a conventional loan with PMI, then you would definitely want to think about refinancing, because you might be at that 80% loan to value, which allows you to get out of the PMI, okay? And that's obviously going to help you not just drop the APR, but also it's going to help you lower your monthly payment, or maybe you can consider getting a lower term on the mortgage. But because you're going to be eliminating the PMI, that sort of offsets the fact that the monthly payment is going to go up. So that's something that you definitely want to think about, guys, as a bonus. Hopefully this video was able to help you understand, I just gave you 4 reasons about what you should be thinking about refinancing. There might be more out there, obviously a little bit more specific, but these are really the reasons why most people, go to a mortgage lender and think about refinancing. If you guys like the video, make sure that you give it a thumbs up. Subscribe to the channel, definitely helps it out a lot, guys. And actually just comment below if you have any questions, or if you're going through a refinance process at this very moment. Until the next one, guys, thank you for watching. Goodbye.